Day trading is one of the most dynamic and exciting ways to engage with the cryptocurrency market. It offers the potential for quick profits, but also comes with significant challenges. In today's video, we're going to break this down for you step by step, so you can get a good understanding of how to start your day trading crypto journey. From understanding the basic principles to mastering technical analysis, risk management, and more, we've got you covered. By the end of this video, you'll feel more confident about navigating the world of crypto day trading. So if you're ready to learn, let's dive right in. So what exactly is day trading in the context of cryptocurrency? At its core, day trading means buying and selling digital currencies within the same day, aiming to take advantage of short-term price swings. The market moves fast, and so do day traders. They jump in and out of positions multiple times throughout the day, hoping to make profit from small price changes. But here's the catch. While day trading can lead to quick profits, it can also lead to quick losses. The stakes are high, and the speed at which the market moves means that you need to make decisions quickly. Day trading is not for the faint of heart. It certainly requires less effort and dedication than longer-term strategies like holding, where you just hold the cryptocurrency for extended periods of time, hoping it'll pay off down the road. So the allure of fast profits is tempting, but day traders need to be ready for the high risk and understand that not every trade will go their way. That's why educating yourself about the market and honing your skills is essential before diving in. So before you get serious about day trading, it's crucial to understand the basics of cryptocurrency trading first. So let's talk about cryptocurrency exchanges. These are the platforms where you'll be buying and selling your digital currencies. Each exchange offers their features, but the primary goal is to help you execute trades efficiently. When you're ready to trade, you will need to know how to place different types of orders. One common type is a market order, which means you buy or sell instantly at the current price. It's straightforward, but can be risky if the market's moving quickly. Then there's a limit order. With this, you can set a specific price at which you're willing to buy or sell, so you have more control over the price. And finally, a stop loss order, which is a safety net that automatically sells your position if the price drops too low, helping you minimize losses. Understanding how to use these orders is key. You want to know when to use a market order for big trades or a stop loss order to protect yourself if the market moves against you. Mastering these basics gives you the foundation you need to trade confidently. Now, let's talk about technical analysis. This is where day traders really separate themselves from the rest. Technical analysis is all about reading price charts and understanding patterns. You'll use different indicators to help predict where the price of a cryptocurrency might go next. For example, one of the most basic tools is the moving average. It helps smooth out the price data and shows the overall trend over time, whether the market is generally going up or down. Then there's the Relative Strength Index, or RSI, which tells you if a cryptocurrency is overbought or oversold. This can give you clues about when a price reversal might happen. Another important tool is Bollinger Bands. These help you understand how volatile the price is and can signal potential breakout opportunities. Learning to read charts and indicators takes time, but it's worth the effort. You don't need to be a math genius, you just need to practice over time, and you'll develop a sense of how to interpret the data and make more informed trades. Having a strategy is an absolute essential for day trading. You don't want to rely on instincts or emotions. Every move you make should be part of a well thought out plan. There are several popular strategies to choose from, but they all require discipline and a clear understanding of the market. One strategy is scalping, where you make small trades throughout the day to capitalize on tiny price moves. It's fast-paced and can be very profitable, but it's not for everybody. Beginners may find it a little bit overwhelming. Range trading, on the other hand, might be a little bit more straightforward. This strategy works by identifying a predictable price range and buying low, then selling high within that range. It's less risky and it can be a great way to start. Breakout trading is another strategy that involves waiting for the price to break through a key level of support or resistance before entering a trade. So no matter what strategy you choose, the important thing is to stick to your plan. Avoid the temptation to chase the market based on emotions or rumors. Consistency is key. Now, before you start trading with real money, it's a good idea to practice. Many exchanges offer demo accounts where you can simulate trades using virtual money. This lets you get a feel for how the market works, and so you can test out strategies without any risk. Trading with a demo account is also an excellent way to build your confidence. It allows you to make mistakes and learn from them without losing actual money. Use this time to refine your strategies and get comfortable with the platform. Now let's talk about risk management, probably the most important part of day trading. Even the most experienced traders lose money sometimes, and that's okay. The key is to manage those losses so they don't wipe you out. One way to do this is through stop loss orders. These automatically close your trades if the price drops to a certain level. It's a simple but effective way to protect yourself. Another important rule is never trade with money you can't afford to lose. Only use capital you're comfortable with risking. Many traders follow the 1% rule, meaning they only risk 1% of their total capital on any single trade. This helps ensure that even if a few trades don't go their way, you won't suffer catastrophic losses. Remember, the goal is to protect your capital as much as it is to grow it. Also important to note that the cryptocurrency market moves fast, and it's heavily influenced by news and trends. Staying up to date on the latest developments is crucial for making informed decisions. Major news like a new regulation or major partnership can cause sudden price changes, so you want to be in the loop for that kind of thing. You want to follow reliable news sources like CoinDesk and Cointelegraph, and keep an eye on social media platforms like Twitter and Reddit, where discussions happen in real time. The more informed you are, the better you'll be able to anticipate market movements and avoid surprises. It's also important to note that market psychology plays a significant role in cryptocurrency trading. Understanding the emotions of fear and greed, which often drive market movements, is crucial to making better trading decisions. Fear can cause traders to panic and sell at the wrong time, while greed can lead to overtrading or holding onto a position too long. Learning to control your emotions and stick to your strategy, even during volatile periods, is key to success in day trading. The final step is to track your performance and continuously improve. Keeping a trading journal is one of the best ways to analyze your trades, identify mistakes, and refine your strategy over time. Record certain details like why you entered a trade, the results you got. Over time, you'll start to notice patterns and areas to improve, helping you grow as a trader. And there you have it, your roadmap to learning daily crypto trading. From understanding the basics to studying charts, managing risks, and staying up to date with market trends, each step is crucial to becoming a successful day trader. If you're ready to take your crypto trading journey to the next level, visit bcoin.net for more in-depth guides and expert tips like this. And don't forget to like this video, follow, and turn on notifications so you don't miss out on any future content. Thanks for watching, and good luck with your trades.